Hello and welcome. 2013 has been a year of both hope and despair. Despair came early when you had that big scare with the Fed saying that they will taper, and eventually they did not. And then you had hope that, well, India has done a lot to fix its balance sheet, and now it's relatively immune to what external forces may actually play out. How will 2014 pan out? That's the question that we are sort of asking in this show. And I have with me Madhu Kela, who's Head of Investment Strategy at Reliance Capital. Madhu, thanks very much for your time. Great to have you with us here. Very broadly, a lot of the events for 2013 are behind us, done with. 2014, the biggest and the topmost on many minds is the general elections.
That's right.
Do you think, let me just start by asking you, that is the most important event for the market?
Yeah, it's a very important event. I would not say the most important event because, in future, we don't know what can turn out to be the most important event. But as things today are from an India perspective, it is a very important event. And it's also important because a lot of investors around the globe are watching this event and the outcome of this event. The market is very strong, feels very strongly about potential outcomes in 2014 general elections as well, right? Yeah, I don't think it is like, discounting gaga of the outcome of 2014 election outcome, though many people would like to believe that's the direction in which the market is moving. But I think that, if that was the case, then all these infrastructure companies and the power companies and what can be fixed with that positive outcome would not be trading at below book or 0.3 or 0.4 times book value. So I think if that outcome is positive and it is very, very convincing, so there is still a long way to go as far as the market is concerned, specifically on those areas.
We're not predicting outcomes here, but we're just talking about a framework with which to approach the market. What, according to you, will be a positive, very clear, without a doubt, positive outcome for the market?
See, from a market perspective, whoever comes, because this country has a 30-40 year history of ruling, and one of the most successful governments in the recent past was the Narasimha Rao government, which was like from 91 to 96.
Right.
And that was not a majority government, but still, it did a lot for from a country perspective.
Right.
So let's say even this government, I have to give full credit, I think last 6 months has been reasonably positive. They have taken a lot of steps.
Correct.
Some of them have shown results, some of them eventually may show up results.
Correct.
So what the market would like to see is a proactive, stable government which is very friendly to economic policies, to reforms, and a lot of things which are like pending for the last 3, 4, 5 years are being addressed by whoever comes in power.
Correct.
So that is what I think market will be looking forward to. But today, can I say with even 50, 60%, 70% confidence that is what got discounted by the market? The answer is no.
But you said last 6 months the government has done quite a bit.
Yeah.
So the government of the last 6 months,
yeah,
just the last 6 months,
yeah,
would you call that proactive and stable?
Yeah,
so if you get a repeat of that in 2014, the market would be happy?
I would say that, something plus then this, a lot has happened. And because there was nothing much happening in the first 3 years and the preceding 3 years,
right,
that is why these 6 months are looking very good. And a lot of which is being done in the last 6-9 months would require a lot of implementation. Right. So market is also not discounting whatever has happened in the last 6-9 months also, because we don't know, because the outcome of that has not got reflected into results of these steps which are being taken.
I mean, execution is still pending.
Execution is pending. The results, let's say you have cleared 25 big projects from a CCI angle.
Correct.
But that spending in implementation of these big projects is what the market will await. And once that starts to happen, then it will start showing up in a gradual manner in the recovery. So I think they've removed the bottlenecks in a lot of things. But the result of that is still yet to get reflected into those companies, into those sectors, and subsequently in the markets.
I just want to take off from that point. 25 very large projects and 100 out of the 300 projects have been cleared.
Yeah.
25 is part of the 100 figure which the government is saying they've cleared.
Yeah, 27.
Yeah, 27. Okay. So how will the government essentially has done its work, which is it's cleared all hurdles, etc. Now it's up to entrepreneurs and groups to actually seed those projects with capital and sort of get them off the ground.
Sure.
That is a natural process, don't you think? Or you think the government can help there as well?
I think the government can help there as well, because in many ways, let's say supposing to some extent you have had a little bit of bad luck also for India last 3-4 years. Like inflation has been very high.
Right.
To that extent savings have got discouraged.
Right.
Once even that trend changes, that stability and what the market wants, if it gets, I will not be surprised that in this environment, India can attract 30, 40, 50 billion dollars of foreign flows, not only equities, but through FDI, which has been little slow in the last 12 months, through FDI, through buybacks as we are seeing, through debt capital. And that sentiment change and attraction of that capital can change a lot of things. And always this is how it happens.
I'm going to touch upon this in a bit more detail, but I just want to go back to the simple politics of it. State election results.
Yeah.
And what it has shown, and how much of it can you really extrapolate in your assessment for 2014? I'm sure you watched it very closely, because there is still, I mean, between state election results and the general elections, there is still a substantial amount of time.
Prashant, I would say that 6 months is actually a very long time in politics. I would not even want to hazard a guess as of today.
Right.
And I'm not trying to avoid your question, because I genuinely believe that the politics changes even in the last 2 weeks.
Correct.
Correct. And we have seen that happen.
Correct.
Few elections are won and lost only on onion prices.
Correct.
So what can change? Let's just wait. Let's just not be very calculative and very proactive. There is one thing which is a positive outcome to my mind, is the decisive voting by the voters. A lot of people have come out and voted. And if that is what will get repeated in general election, then I think there is a very strong policy that the mandate will not be very fractured. And that is the biggest worry of the market. So if the mandate is not very fractured and it's not like a big khichdi, I think market should be okay with that outcome. But it's too early to hazard a guess.
But the takeaway from the 4 elections is, and maybe it's a skewed sample because these were traditionally BJP strongholds in that sense.
That's
but
right.
The trend seems to be that mandates are very clear.
Yeah, that's what I'm hoping. That's what I'm saying. And that, plus you have 13, 15 crores new voters. And these are young voters who are going to be first time voters in this general election. So I feel that, let's not rush into making conclusions. But I think we'll get to know in the next 2-3 months which way the wind is blowing.
Absolutely.
Yeah.
The BJP is clearly the market favorite in that sense. Yeah. What about this new 1-year-old party in Delhi, which has done phenomenally well, for its debut at least? Do you think are people in the market that you speak with, are they kind of factoring that into the equation and how that might change the game because of their strong showing? Or the assumption is it's a very Delhi-centric party and it's going to be difficult to replicate that?
Again, as I said, that a lot of intelligent people whom I speak to, they would watch how this whole party evolves over the next 2-3 months. There are new people who join up into this party. How is the organization of this party will get built up.
Right.
So people will give it time rather than jumping at conclusion that of any kind of conclusion, whether they will be impactful or not impactful. Right. And as I said that it will evolve very soon. We are not talking of months and years. It will evolve over the next 2 months.
Got that. Yeah. I'll ask you what the market will do over the next 6 months in a bit. But I just want to ask you, you said you made the point of sentiment improving.
Yeah.
Just give me an example. How does sentiment improving actually affect real change on the ground as well?
It actually starts only with sentiment.
Right.
That, we saw in 2008, after the collapse, once market started to improve. Only the sentiment had changed in 2009. But see, we saw a plethora of companies who are very capital starved. They're able to raise money.
Right.
it starts every time with that only. That you have a change in sentiment, people become excited. And you know, at this point of time, for equity markets, which is so under-owned, last 5 years, Prashant, there is 1,20,000 crore rupees. Last actually 3.5 years, 1,20,000 crore rupees of equity withdrawal from life insurance companies and from mutual funds.
Correct.
Put together.
Right.
So people, there is no ownership. Little bit of change in the sentiment. You still have $600 billion of saving in this country.
Right.
After 5 years of virtually no equity participation, if sentiment changes and if public starts to participate even to the extent of 3, 4, 5%, we are talking $20-25 billion could easily come into equity markets from local players.
Okay.
That will only happen by sentiment change and by a meaningful sentiment change. You have to also understand, you know, other asset classes, be it gold or be it real estate. It looks safe to be invested in there, but returns have stopped coming.
Correct. Recently.
Yeah, last 2 years.
Yeah.
So I'm just saying that, you know, if you look all this in perspective, if there is a sentiment change, there is so much skewed under ownership in equity, and other asset classes have stopped making the kind of money which they are making for investors in the 10-year time frame. This coupled with this, so slight bit of change can swing. It's like a election swing, you know, 2% voting can change the fortune. That is what.
But you said meaningful change in sentiment.
That meaningful change will get that kind of money back in the market.
Right.
I'm saying, and that, you know, one is hoping that the change, whatever happens, will be a meaningful change.
You're again referring to elections and
yeah, I'm just saying that overall sentiment-wise,
right.
I'm not only referring to elections. Election is a major portion of that sentiment change. We have to also see, is there a gradual recovery on all this work which is being done? Right. Is there a gradual recovery? Have we seen the worst of inflation? In my opinion, markets have discounted worst of inflation fears, which are in the price.
Right.
Have we seen the, you know, all the macros really played out from a market perspective, whether it is interest rate, inflation, absolute low growth, you know, lack of policy making. A lot of it may be behind, and I'm not making a case for a, you know, big recovery in the economy because a lot of balance sheets are still contracting. So I'm not making a case for a big recovery. But with the sentiment change, the delta can be larger than what the market today is feeling.
Okay, got that. You know, one big issue has been falling public savings.
Yeah.
Right? And that needs to be, and I guess it goes back to the point of inflation, which has been very high.
Point of inflation and also point of, you know, growth coming back.
Growth coming back. Yeah. Fair enough. So, you know, it seems like the growth slowdown is very entrenched.
Yeah.
And inflation is very entrenched. So, we can say CPI is now 11.5%, 12%, and that's been led by vegetable, passing on through food and passing on through headline numbers. But forget about food, forget about fuel. Core inflation has been 7, 8, 9% now for many.
That's not been core inflation. Actually, core inflation, which is WPI.
No, I'm talking about CPI.
Yeah.
I'm talking about CPI, which and RBI will move on to tracking CPI in a more significant manner, right? That has been very high, even without this food shock, vegetable shock, and fuel prices trending up, etc.
But that was also on the back of the MSP rise, which everyone got over the last 4 or 5 years. And that's where you see, in spite of this being an election year, the minimum support price rise across the board has been minimal in the last 5 years, in this year. And this will get reflected 12 months from now in even your core CPI inflation. Because the paddy prices went up by 200 rupees to a quintal, and if this year it has gone by, let's say, I'm just hypothetically 100 rupees to a quintal, that base will come to effect the core inflation 12 months from now.
But it won't make a huge difference, right?
It will make a big difference. It is ultimately, inflation is a year-on-year number.
Right.
It will make a big difference.
Right. And I'm just trying to separate the sentiment impact of a potentially very positive outcome in terms of
irrespective. This impact will happen because this is just mathematics. It's a simple calculation. So irrespective, this will happen.
And what about the growth slowdown? You think that is the worst is behind?
The growth slowdown will need sentiment perk up. because that will need capital, it will need debt, it will need interest rates to come down. The growth slowdown, we are not making a case that that will happen in a hurry.
Okay.
But the sentiment change can mean big for growth slowdown as well. Ultimately, it's a virtuous or a vicious cycle. Once you get into a virtuous cycle, you raise
a lot of things automatically fall into place.
A lot of things automatically will fall in place.
Right. You know, the RBI didn't do anything. I'm just thinking out aloud here. You think that partially the reason could be that the RBI actually fears that the turn in growth isn't happening, or even worse, and you can call me, sounding alarmist here, the RBI fears that actually growth is actually going to slow down even more, and hence they've sort of deviated from their stated stance that doesn't matter where inflation is coming from, we have to control expectations on inflation. This time they've not actually increased rates.
Why should RBI react to vegetable and fruit price rise?
No, that argument,
so that's why they have not reacted. I think that's why they have not reacted. But if they see that in spite of this, inflation remains stubborn in the next 3 to 6 months, possibly they will react. But I think this is very sensible that at this point of time, obviously, any central bank, has to balance out between inflation and growth. And they have actually come out and spoken really well this time, saying that yes, we are even concerned about the growth, which is not what you are speaking is not a hidden secret. Everyone knows that they have to be really concerned about the growth, and if they continue to raise interest rates.
Look, growth has been weak for even over the last. RBI has increased rates by 50 basis points over the last.
Prashant, if you increase further,
right,
which means whatever little hope which you have of growth rebounding, that also you will kill. Na? So you will not be able to control vegetable or fruit inflation by increasing interest rate.
Right.
But you will whatever hope.
So essentially you said the RBI felt, well, this is the point that we have to.
They have to watch.
Now assess.
And again, RBI would have been very alarmed. See, as I said, that we can keep calculating because it is our job to keep calculating whether inflation is 50 bps higher or lower.
Right.
If RBI on the other hand was very sure that inflation is going to go up from 8% to 10%. If they even that inkling, they would have raised interest rate.
Right.
So you can flip that thing by saying maybe they are also comfortable that all that base effect will start to play off, which I am talking about, and it will remain in this range.
And apart from food and fuel, especially in the CPI index, a lot of other commodities are showing disinflationary trends.
That's why I think they are drawing a lot of comfort from there also, that maybe it is few months. So let us just watch it and then react.
Correct. The market is pretty okay with taper now. So first of the taper has started, or you think?
Yeah, we are better prepared. I think we are better prepared than 6 months. At least India is better prepared because we have raised this $35 billion and we have a governor who is very proactive. There is a talk of India going and joining the bond index fund of the JP Morgan and other index funds that can attract a lot of capital. So we are better prepared, and that is what is getting reflected even in your currency, which has been stable in spite of this tapering announcement. But I would not go that far of saying that there will be no impact at all.
The last time a country tapered was Japan. They eased heavily in 2002, 2003, and they started tapering. Again, a very calculated, systematic taper, communicating to the market in 2006.
Yeah.
Initially, market went up and then it fell 25% very quickly. You think a repeat can happen in the US and the risk can come from there?
I think US, what they have done with this tapering, also, again, pardon me saying so, a lot of you people miss the positive side of the picture which comes. So what the positive from the US Fed announcement is, that they are not going, interest rates will remain flat or zero
even after
for a more prolonged period than
Sure.
originally was anticipated.
Sure.
And that is what matters for US today more than the tapering.
Right.
Because whatever amount which is being pumped into the system,
Right.
it is not flowing through into US corporates or into US economy. So even if you stop these bond purchases but kept the interest rate zero, that is more material, and that is what I think the market reacted.
Right now the market is up because of that.
The market reacted to.
Yeah.
But I am sure, once this entire $85 billion settles down, it will be interesting to watch how the market actually reacts.
Right.
So I would not rule out some kind of a correction, because let's face it that, there will be no big earning change in the US in last 2 years.
And maybe for the
But
S&P to be at 1800
but
plus.
the markets are up 50%.
Yeah.
And a lot of these pessimistic people have joined now the optimistic bandwagon, and the optimists are saying that it has to get into a bubble stage before it starts to decline. So majority of the people have gone into the positive side.
Right.
So there is always a possibility that
yeah.
there could be some correction
Yeah.
in the international market.